Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Jared Williams. Thanks for being on the show, Jared.
Yeah, thanks, Whitney. I'm been excited about it. Thank you for having me.
Yeah, my pleasure. It's been great to get to know you quite a bit over the last several months now, and I look forward to having you on in this discussion. I think you can add a lot of value to the way we are thinking about investing and thinking through some of that. So I'm looking forward to getting into this. But a little about Jared. He's the founder of Biblical Wealth Solutions. He's the host of the Biblical Wealth podcast, and he's on a mission to revolutionize Christian personal finance. And so, Jared, thank you again. Maybe you can elaborate a little bit on who you are, maybe where you're located, your focus, and let's kind of dive into what does that mean, Biblical Wealth Solutions, and you know how you're going to revolutionize just Christian personal finance and why we should be concerned with that.
Yeah, absolutely. So I'm based out of Tennessee. I'm married, have 3 kids. My wife homeschools the kids, and so between business and family and church, that's pretty much my life. I used to have hobbies, not so much anymore. Although I enjoy,
changed, right?
Yeah, it changes. Yeah, it changes a lot. But I enjoy all the things that I'm getting to do today. So yeah, coming to Biblical Wealth Solutions was certainly a journey, a process. I think many providential things happened along the way, but ultimately, I'm seeking to solve 2 problems. So one was introduced to me, and that was the fact that most investors, in the U.S. and around the world, even most Christian investors are, invested in companies that support or sometimes even profit from unbiblical activities such as abortion, pornography, addiction, child labor, and other unbiblical activities that that we. I know your podcast isn't necessarily a Christian audience, but my people that I'm talking to are, and so that we as Christians, wouldn't want to be involved with. We wouldn't want to be profiting from. We believe that the money that we're invested, that everything belongs to God, and so we are just stewards, and we have to be mindful of how He would want us to use His money, and so in our spending, in our giving, and even in our investments. So that was the first, problem that I became aware of, and that really was what got me into the investment industry as a financial advisor. And so initially I was helping families move money from secular mutual funds into these biblically screened mutual funds, and there's really lots of them that exist today. So we just helped them move their money over so that so that they could be confident that their investments align with their values, that the funds they were using had been screened so that there weren't any of these companies that were, however involved in these activities that our clients wouldn't have wanted to be involved in. But after I did that, I learned that, hey, once we moved the money, that was really the easy part. That was generally an easy sell, so to speak, and an easy process. And then people needed real financial advice. They still needed real financial planning. They needed help making wise decisions, and they would be all across the board in terms of their needs based on age and situation. And so I became very passionate not only about helping people improve their stewardship through those types of investments, but solve the financial problems that all of us face and that we're trying to figure out. And so after several years of following what I tend to call the typical financial approach, following that as an advisor, following that personally, with the one exception of using these biblical mutual funds, I discovered that most U.S. families are losing substantial wealth or substantial wealth potential due to this approach. They're losing wealth and they're losing control. And so then I began to figure out how do we solve that problem? And I'm happy to talk about what causes that. I don't know how much time we'll have for it, so you can kind of lead that part of the conversation with me.
I wanted to back up a little bit though,
sure.
And say, I just remember it's probably been 8 or 10 years ago, I don't know, 8 years or so ago, when it was exposed to me that by investing in the mutual funds that I had or whatever it may have been, that I was investing in things that I completely disagreed with and would never want to support. It didn't even cross my mind until then. I just didn't even think about that was happening, you know? Go ahead.
Yeah, I was just going to agree. I think that's, in my experience, 95% of people, at least, that I talked to, and myself included, we were introduced to this idea, this realization, this fact of what's going on. It's been a rare person that calls up and has been like, I was thinking about my investments and what is going on behind the scenes and the companies that I'm invested in. And, that has happened, but it's really unusual. So I think most people are in the boat that you and I were in, that someone else brought this to our attention. I had forgotten, we talked about this before, I'd forgotten that you had, used the biblically screened mutual funds at some time in the past.
Right. I had, and and the reason I bring this up, and I think you're a great guest too, like for the listeners, is like, I want the listeners to be thinking about, like, what are you invested in? Not all of my investments are in real estate. While that's the majority, by far, but it's, it still have some mutual funds. Still, a lot of us, even if our mindset shifts completely to investing in real estate, most of us still have some mutual funds sitting back there doing something.
Yeah.
And just thinking about what are those funds invested in? I just feel like you should know. And even if you're not a Christian, there's probably still things you're potentially invested in that you don't agree with, or that you haven't thought through, and even as you're investing in real estate, I just encourage you to have this mindset of, that operator that you're investing with. Like, what do they stand up for? Because you're investing in their company as well. You're investing alongside them. And, just knowing some more details about them and their company and what they stand for, I just think is very important.
Yeah, there's been a growing industry over the last couple of decades, really, called values-based investing. And so, biblical-based investing or biblically responsible investing is a subset of that. And so, for people who wouldn't share, my values personally, there certainly are mutual funds out there to fit any value set. There are ones that are very focused on environmental consciousness, or I don't know. There's other things, but there's many of them out there now. So people really can invest not only for profit, but to support whatever it is that's important to them through these value-based screened, mutual funds.
So let's talk about that losing wealth and control a little bit, and what causes that, like you were talking about a few minutes ago.
Yeah, so this was definitely an unplanned discovery on my part. I had been meeting, I'd had a couple of meetings with a financial planner, a Christian financial planner out of Louisiana, and he was sharing with me his retirement investment strategy. So this was specifically for people who were about to enter retirement, or already in retirement, and how he helped them manage their mutual funds. It was all stock market based investments. And we talked about the just reality of volatility in the market long term. How are we going to manage these inevitable ups and downs, and specifically the downs, while taking income and having to make it last a long time. And so I won't go into great detail, but as part of this very fact-based presentation that I was learning from him, and I was beginning to implement the strategy in this presentation with my own clients who were at the age that it made sense, I saw that over 38 years at that period of time that I was doing this. I don't try to update that year every year. I just remember at that time it had been 38 years since we began looking at these bear markets, these historical bear markets in the market. That the S&P 500 had grown 19 times over that 38-year period. And I knew that, just looking at a long-term perspective, that the S&P 500 tends to return, about 9.5%, 10% a year over really long periods of time. That's a decent average to count on. And so I knew those facts. And I was talking with my daughter, who was 8 at the time, and she owned $8 of Lowe's stock and $8 of Cracker Barrel stock. So she wanted to learn about investing. She's very entrepreneurial minded. She's always trying to figure out how she can make money. And so I was trying to, as a good financial advisor, dad, teach her how to be an investor. And those companies were biblically responsible. So she had these, these two stocks, and within like 2 weeks, she was wanting to get her money back out and spend her $20 or whatever on something. And so I was trying to show her, like any responsible parent, I got a compound interest calculator out for my 8-year-old, and was trying to use, $1 and show her what that could do over time. Of course, she very quickly didn't care and walked away from that conversation. But I decided to kind of test what I had been seeing in this presentation and what I had been talking with clients about using this calculator. And so I put, just $1 into the calculator, 10% a year average for 38 years, and fully expecting it to have grown to $19, over that period of time. And I hit the button, and it had grown to $38. And that was just a coincidence. The 38 years and the 38 times was just a coincidence, but the calculator said it should have had a result that was twice as much as what we were seeing in the market. And I thought, what caused that? If it had been slightly off, no big deal, but this was a huge difference. And I thought about it, and I thought, this is a calculator. There's no emotions, there's no mistakes, there's no fees, there's nothing. It's just a calculator. The market, or the indexes anyway, they're just tracking. Again, there's no fees, there's no emotions, there's no errors. It's just tracking what happened. The only difference between these two, if they're both averaging 10%, is that one is a fixed return and one is a variable return or a volatile return. And that really made me think about how volatility may be impacting long-term returns. So of course, being the nerd that I am, I built this big spreadsheet calculator and tested multiple hypothetical scenarios, and I won't walk through all of those, but basically I found that the more volatility there was, the more variation in returns, the less money was there at the end. And it became very substantial, losing 30-40% over 30 years just due to volatility. And then I added fees onto that, and I knew my clients paid fees, and everyone has to pay for the people they work with in partners in some way. But these types of fees are on top of, or they're after the investment itself has produced its return. And so I looked at what just a 2% fee would do to someone's portfolio over 30 years, and again it was a 30+% reduction in wealth. And so looking at those two things in combination, if someone did exactly what I was advising them to do, and the majority of financial advisors was advising them to do, they were on track to lose over 50% of their wealth, in a 30-year period of time. And it gets worse if you keep on investing into retirement. So then I began learning about other things as well, other problems. But the solution that I found, again, unplanned, I was introduced to 3 different non-Wall Street type investments within a pretty short period of time. They weren't all necessarily good investments, but they did open my eyes to the fact that people could get equity-like or stock market-like returns, not without risk, but certainly without the volatility and without the additional fees and costs that come along with stock market investing. So things have gotten much more sophisticated. I've learned a whole lot more, and how to vet these and how to find new investments and how to work with different ones, and brought even more to the table for my clients in terms of how to help them preserve their wealth and not lose so much wealth and maintain control. But that was really the beginning of it. And so then I started introducing, the one of those 3 that I thought was a good option to just a handful of clients, and was really pleasantly surprised to hear how excited they were to have an alternative to the stock market. And so I thought there's real opportunity here. And so then, several years later, I'm continuing to learn and was introduced to you. And actually, I heard you on another podcast. And so, reached out and have been excited to learn more about LifeBridge Capital and everything that you're doing as one of the several different alternative investments that we're able to introduce clients to. Nice.
So, you're talking about like the 2% fee equals more than 30% reduction.
Mm-hmm.
And I mean, that's like, you think about just 2%, you think, well, okay, that's just the cost of doing business. But,
yeah.
but then when you think 30% reduction, I mean, that's a lot, know, that is it's neat to just to hear that. So it kind of sticks in our mind a little bit, so we can really think through that. And maybe you can elaborate on like how you help clients to reduce that loss, or what that looks like, or maybe what we should be thinking, if we're working with somebody like yourself, or how we, reduce that reduction.
Well, from a fee standpoint, it certainly made me as an advisor become much more fee sensitive, for my clients. Now that obviously means a potential reduction in revenue on my end, but sometimes that revenue reduction on my end is relatively small, but the impact it can have on my clients is massive. Another, I guess, sub-discovery, in building that spreadsheet, I looked again at those fees, and I wondered how much of this, in this particular scenario that I ran, so the numbers would change, of course, but in this particular one, it was a $360,000 loss to fees over this 30-year period of time. And I'll say, how much of that was actually the fees? and it was just under 50%, maybe 48% was actually fees. The rest of that loss, so $180,000 in this instance, was lost opportunity cost. It was the money that those fees, that those dollars were not able to grow into. And so that $200 fee in year one and that $250 fee in year two, and as it grew, that added up, because those dollars lost 30 years of compounding interest in those scenarios, and it really made an impact. So it certainly made me rethink my model and how can I bring value to clients in a way that I can reduce or sometimes eliminate their out-of-pocket fee cost altogether. And so that has become possible by working with alternative or non-Wall Street investment providers who sometimes are able to compensate me in a way that it doesn't have to come out of the client's pocket, and so it can save them money there. Or it means I'm working with mutual funds or mutual fund managers who have lower fees, and so maybe we're not eliminating it, but we're trying to reduce it as much as possible. It has, in some instances, gone to me charging flat fees to my clients rather than percentage-based fees, because it's the same amount of work, and why should one person pay me $1,000 and someone else pay me $10,000 for the same amount of work?
I just appreciate, like if I'm working with you, like appreciate that you are thinking this way. That you're looking for our alternative methods of even, yourself gaining an income, so it doesn't affect, my returns as much. I just think that's another perk of working with somebody like yourself. But one thing I wanted to bring up before we move to a few final questions is, like, you're talking about, your daughter investing or owning some stock, and tell me a little about how you introduced that to her, or just to children in general, just your thoughts on, in introducing them to investing, and when, and maybe a little bit about how you've done that.
Well, I wouldn't say that has been successful yet, to be quite honest.
She hasn't retired yet, huh?
No, still doesn't care too much about investing. So she's still taking a very short-term approach to money. And the other two children are younger, so her big concern right now is learning how to make money, which that has been really interesting, to be honest. I have been able to give her some, I think, interesting ways of thinking about making money and starting her own business. It's very small scale. But I think if I were trying to teach children, I would begin by teaching them to save, not to invest. And I think when they, whatever their income is, whether it's an allowance, whether it's money they make, at home doing chores or mowing the neighbor's yard, or they're old enough to get a job or whatever, whatever that is, I would encourage them first to learn to tithe and learn to save. And when they have become very good savers, then I think it's time to have conversations about investing. And from there, I would refer them to my podcast.
Awesome. Well, no, I just think it's so important that we're teaching from a very early age, and I try to share what I can, with my boys, and they're 5 and 7, and just to get them thinking that way, And we have a little like little banks for them, and there's 3 sections. There's like a give and save and my goodness, what is it?
Spend, I guess.
Spend, yes.
Yep.
Yeah, there you go. And just thinking through, how do we split this up? How are we thinking ahead? And or maybe they do spend a little too much, and then they kind of have the hard reality of, well, I don't have any money to spend now. And it's kind of it's better for them to experience that with $20 than it is $2,000 later.
Absolutely.
Right?
Yep.
So,
I'm happy to let my kids blow their money and feel the pain of it later, because if they can learn that now, they will avoid a lot of pain as adults. I hope. That's my hope.
Yeah. Right. Well, Jared, what about, how do you help people prepare for, like a potential downturn, or maybe something like we're, experiencing now? How were you helping people prepare for, something like that?
Yeah, I think 2 main ways there. One is not being afraid to have cash. I think that most of us want to keep as little cash as we can. We'll have our emergency fund, and for some people that's very small. For some people it's 3 to 6 months, maybe 12 months tops. I rarely see more than 12 months of expenses. And I think the reason is that we're afraid to save more cash because we don't have a productive place to put it. And if we had a place where cash can earn money, can be productive, but still maintain liquidity, we would be much less afraid of missing out, on the returns for having cash. So I do try, and there's a few options for that. I do try to help people find productive places to store their cash. so that when the market has these downturns or whatever kind of economic problems or difficulties arise, they're just in a much more secure position. The other way is by using non-volatile assets, non-correlated assets like real estate investments and other types of non-Wall Street investments. So again, not that they don't have risk, not that they may not face some impact from the broad economy as a whole, but they shouldn't just plummet in value, the way that the stock market can. So I believe that whether you still maintain some money in the market or not, that adding non-market assets really is true diversification. I don't care how many mutual funds somebody owns, they pretty much all act the same, with small variance. So I really encourage people to have money, whether it's in cash, whether it's in alternative investments, both is best outside of the market, so that they're really in a good position to take advantage of whatever opportunities arise and, avoid huge impact, devastating impact from, again, whatever may arise in the economy.
What's a way that you've recently improved your business that we could apply to ours?
Oh, goodness, that you can apply to yours. I think that I am always striving to be really creative in finding solutions. I'm always willing to have multiple conversations, to ask unusual questions, to maybe even seem weird in my asking of questions, to find solutions that are going to be a win-win for everyone. I don't like settling for this is good enough or this is okay. I really want to find the best solutions for people. So for me, it has been getting creative and how can I be compensated in such a way that is a win for everyone, and it's not taking money out of my clients' pockets, or it's reducing that, or how can I structure my business in such a way that I can do multiple things that most advisors aren't able or willing to do at the same time. I think I've recently added a lot of informal partners to my business, and that has been extremely helpful. In a variety of areas. I brought on a partner for my podcast. Rather than just hiring someone out, I wanted someone who really had an incentive to help make it grow and make it the best, so that he's not just editing, he's co-hosting, he is editing, but he cares about it growing and doing really well. And so I think that will pay great dividends in the future because he's truly a partner and not just, not a vendor.
Love that. Thinking outside the box and with partnerships as well. But even earlier there, you talked about asking good questions. Like, it's so important that we ask good questions. The questions you ask are so important. So tell us, how are you finding investors right now?
To be quite honest, that has been the challenge. And I find that is a challenge for a lot of advisors. I think there are a lot of really good financial professionals, whatever licenses they have. There's a lot of really good ones out there. And many don't realize getting into the business that you not only have to be a financial advisor and be knowledgeable there, but you have to be a salesperson to some degree. You are a business owner, unless someone is bringing the prospective clients to you, which is very unusual. You have to wear a lot of hats. And so that's been a challenge for me. I've been able to do great work and had great relationships with the clients that I've had, but adding new clients has been a consistent challenge, and I think it is for the majority of people, in my industry. So over the last year and a half, I've been really, really focused on just getting good at that, doing whatever it takes to learn how to be able to systematically bring in new clients, and realizing there's opportunity there to serve other advisors like myself who aren't good at that. I personally know a number of people who I think are very trustworthy, high integrity, great advisors, and they struggle to be able to talk to enough clients. There's so many people they could help if they had the opportunity to talk with them. So I really want to make that a possibility as well. I want to be able to have enough clients that I can serve those families, those advisors, by bringing clients to them. So I have done that by taking courses on how to grow social media and have a larger presence that way. Obviously, starting a podcast. It's relatively young at this point. So starting that podcast and then looking at being a guest on shows just like yours and others who would speak to an audience who would find what I have to say interesting. And there's other things planned for the future, but I can only do so much at once. So
Sure. Yeah. Jared, what's the number one thing that's contributed to your success?
Well, I mentioned at the very beginning, I think that many things have been providential. So I think many of the things I have discovered, many of the relationships that I have, as I look back, most of the really big, career changing things that have happened were not planned. They were not out of my efforts. I do work hard. I think I'm fairly smart and certainly innovative in what I do. I hope this doesn't seem cliche, but in reality, I think that the Lord has been growing my business, and I'm very much along for the ride. I think outside of that, it has been being willing to think very outside of the box, to do what is not typically done. I think I tend to be pretty contrarian in a lot of ways, and I think that can lead to a very successful business.
And how do you like to give back?
Financially, most of my giving back right now is through tithing, is through giving to my local church. I certainly like to give back with my time. I like to give back helping people, whether they can, pay me for it, whether it's a really small, opportunity, but I know they could use the help. I know I've been in those positions where I could use the help. So I like to give back in that way. And certainly I think that helping my clients, be able to recover wealth that they're likely to lose, be able to provide great service in a way that costs them less or nothing, is a really great way of giving back and helping other great investment providers, like yourself, be able to find clients and have more people coming in. And it's just a very, very, win-win situation that I think brings value to everyone. So I do feel like the fruit of my labor, so to speak, is very impactful and gives back. I look forward to giving back in other ways as the business grows, and there is more surplus with which to do that. I'm very excited about those times and opportunities as well.
Nice. Well, Jared, grateful for your time today, and I just appreciate just helping us really think through, or maybe even change our mindset on what we're investing in, how we're investing, just knowing what we're investing in, just the value-based investing, and even just the points you brought up about losing the wealth and control, and thinking about how those things affect us long-term. Just it seems small now, but over a long period of time, wow, to really think through that. And even teaching our kids to invest a little bit as well. So, Jared, grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, thanks. You can find my website at biblicalwealthsolutions.com. You're welcome to send me an email if you have any questions, comments at hello@biblicalwealthsolutions.com. And, I'd be happy to share more. You hear more of my story, hear more of what we're doing for clients at the Biblical Wealth Podcast. So trying to make everything streamlined there. It should be very easy to find me. With the name.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.